Hi, everyone, and welcome to today's webinar, Get Ahead of Property Tax and Business License Compliance. My name is Ashley, and I will be your host today. I have a couple of housekeeping items before we dive in. First, just a friendly reminder that Avalara cannot provide legal or tax advice, but we will answer your questions as best we can. On your screen is our safe harbor policy. Please take a moment to review that while I continue with some additional housekeeping. We are recording today's webinar, so if you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized, so feel free to move or resize the windows. The slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. That additional resources section contains a lot of great helpful content, so take a look at those. And again, that is where today's slide deck is located if you want to download it. There are several ways to engage with presenters and attendees today. So first, if you have any questions, you could submit them using the Ask a Question box on your screen. We will try and save time for Q&A at the end of the presentation. And if you have any troubleshooting questions, you can also submit them in that box. Second, you can join our attendee chat. There is a button along the bottom of your screen with two chat bubbles. If you click that, the attendee chat will pop up on your screen. So feel free to introduce yourself, network, discuss today's topic. Maybe drop in the chat what the temperature is today. I know there's a cold snap going on for most of the country. Third, you can also react to this presentation by clicking the emoji icon along the bottom. Give us a thumbs up as we go along or a heart. And then if you have any technical issues, there's a question mark icon with suggestions from our webinar provider, or you can reach out using the Ask a Question box and I will try and help you out. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will also pop up on your screen for a limited amount of time, so please make sure you're ready to answer when the poll appears. It's best to not split or tile windows on your screen, as this can affect the placement of the poll question. And we have also had issues with attending using mobile to answer the poll questions. So if you can, please try and get to a desktop monitor. That works a lot better for this platform. And then you must also attend at least 15 minutes of today's presentation. So once you have met those requirements, your certificate will be available to download in the Earn Certification box on your screen. You can click the icon to access it. And if you don't have a chance to do that today, you'll also get a post-event email where you can download it. And then again, if you have any technical issues, please reach out as soon as you can so we can document the issue. All right, let's meet today's presenters. So first we are joined by Melissa. Melissa, can you take a moment to introduce yourself?
Good morning, everyone. I'm Melissa Shad, and I'm the Senior Product Solutions Engineer for Property Tax. I have about 20 years of experience in the property tax technology industry and lots of good information out there to share.
Great. Thanks for joining us, Melissa. And we also have Andrea. Andrea, can you take a moment to introduce yourself?
Thanks so much, Ashley. Hi, everyone. I'm Andrea Jaffe. I'm a Senior Director in Avalara's Professional Services Division, and I have been in the licensing space since 2011. Happy to be here.
Okay, thank you both. Well, that is all I have for the housekeeping, so I will pass it back over to our presenters to get us started.
Thanks, Ashley. So today, everyone, we're going to try to get through a good overview of how Avalara can help with your compliance needs around property tax as well as business licenses, and where those areas overlap. There's differences between property tax and licenses, and as well as sales tax obligations, but there's also a lot of similarity. And we have some, tips and tricks for you to see where our knowledge can help you, and how, where you have to pay attention to detail in both arenas, both in the property tax areas and in the business license areas, and how the tools that we have can help you do magic with both of those requirements. And so we're going to go through, essential components and also some, handy information that we can help you with, that we can provide to you. And we'll start on the business licensing side. So that's my area. There are 3 types of business licenses generally. There's business licenses, the way we use the terminology, there are business licenses where the government authority is granting you permission, so to speak, to conduct your business within their borders. So we typically refer to those as business licenses. Many different industries and business activities require many different kinds of licenses. Avalara actually tracks over 200 license types, and there are, just to make things interesting, about 35,000 issuing governmental agencies that have some kind of registration or license that you need to apply for. Permits are another term, and sometimes they're interchangeable, but those are typically things that have to do with health and safety. So you'll hear things like alarm permits, food permits, sign permits. A lot of them are for one-time actions. For example, getting a sign permit usually is a one-time event, but they are also renewable in some cases. So those business licenses and permits can be interchangeable. And then last is tax registration. So tax registrations can cover multiple different kinds of taxes, excise tax, things like privilege tax, things like sales tax, payroll tax, all those kind of things. We also do some of those, getting those things situated, getting those registrations done for you. So that is another term that we use in the discussions. We just want to clarify that all those license types are out there and they can be used somewhat interchangeably, but they do have some individual nuances. So as I mentioned earlier, about 35,000 municipalities in the country. Obviously, we're all familiar with the 50 states, but there aren't as many licenses issued at the state level as there are at the local level. And so we're talking about 50 states, 3,000 counties, and 35,000 cities, towns, special purpose districts, things like that. So a lot of geography to deal with. And then we have certain kinds of special purpose districts that overlay. So you can have a police jurisdiction or some kind of enterprise zone. So when you're dealing with this kind of work, you have to be aware that all of those agencies and all those authorities happen to have their own mandates. So you'll see a lot of variability among the various levels of government and the various agencies across government. And so you have to be kind of tuned into what the requirements are, and they will vary. Most of the time, there's a state authorization. So each state authorizes its cities to issue licenses, and some states prohibit cities from issuing certain kinds of licenses. So there's always going to be a state authorizing mandate. But after that, state by state, there's going to be either uniformity or a complete differentiation between the cities, and they have a lot more autonomy into how they issue things. Each one of those authorities become their own, kind of specialty in terms of figuring out how to deal with each one and what they require. And then, of course, the big picture here is that you want to maintain compliance, because if you fall afoul or if you run afoul of any of the requirements, any of those authorities or any of those entities can come in and do some enforcement action. Could be up, something like a fine, or it could be up to including closing the business, or, temporarily or even permanently. So this is one of these areas where that's why we're in business. There's 35,000 different flavors of ice cream here. So we have to really, get our arms around a lot of unique contacts, a lot of unique forms, a lot of unique processes. And that's what our tools and our folks help with. Yeah, and we've done some surveys in the past. A majority of compliance professionals spend more than 3 hours researching and preparing applications for a single new location. And the more locations you have, you can do the math and multiply that 3+ hours. So I know people may have seen on the bottom of IRS forms that estimates how many hours you spend to deal with a form. Licenses are kind of the same thing. We have this kind of overarching need to gain information. The information is not always readily available. You have to maybe contact the authorities. Many authorities have websites, many do not. They're still in the 1980s in some cases. So, you have to do the research, and then you have to actually do the filings. And of course, governmental forms probably get billed by the word. So there's a lot of words on those forms, and you have to really work through getting through all the details. And so that's why the timing adds up. And this is, of course, administrative work. It's not necessarily going to make a profit for you, but it's stuff that has to get done so that you can do the business that you're in. And so, we have some of these different, risks associated with the compliance or non-compliance, so to speak. You can have if you renew something late, these renewals can be annual, they can be quarterly, they can be semi-annual, they can be multi-year periods. You can have some that are once every 2 years, once every 4 years, etc. So knowing when they're due is critical, but not getting the license renewed on time can trigger a late renewal penalty. Could be a warning, could be, like I said, any kind of enforcement act. And if you have other issues going on in a jurisdiction that may make the authority look askance at your business, if your shopping carts are out in the street, stuff like that, they take the opportunity to enforce pain upon the business whenever there is an opening. So that late renewal could really be a risk. And then, even missing licenses or expired licenses can actually halt your operations. For example, the highly regulated licenses, such as liquor licenses or tobacco licenses, if you don't keep them in compliance, you can lose the privilege of selling those products. If your liquor license is not renewed on time, the distributors are not allowed to provide your business with their products. So you have to always know the status of your license. You have to be able to produce your license for review by inspectors as well as sometimes suppliers. So you don't want to have any disruption in business, and therefore having those licenses renew on time minimizes that risk. The bottom line is you really never know what the consequence is going to be, so it's always good to be proactive and compliant, and that's what we're here to talk about further with how we can help you do that. I'll turn it over to Melissa.
Sure. So property tax, as Andrea mentioned, ties in with licensing, because what we're seeing more and more of is a combination of jurisdictions where if you don't have your property tax paid on time, they will sometimes collaborate together and not allow your license to be renewed, which then, as Andrea mentioned, halts your business. But also because this cycle is very similar in that, with property tax, whether you have real estate or personal or both, there are different things that happen at different times in the year, depending on the jurisdiction. And, with property tax, typically, there are annual returns that are filed in 37 states currently, and then there's bills and assessment notices that come from pretty much everywhere that you have real estate for sure, and sometimes personal property tax. And those can happen throughout the year. Some of them get paid in one installment, some of them get paid in 4 installments, some of them give you an estimate, and then later they give you the real bill and you have to true it up. So knowing the difference between the personal property tax and real is important. So many people that have licensing also have locations. And if you have locations and you own that location, you probably have real estate. So real estate versus personal property tax is a little bit different, just because you don't typically have to file any sort of return on your real estate, just like you don't for residential property. But you sure do get a tax bill, right, guys? So when you have real estate, you can certainly expect a notice of assessment that is going to give you the value. And that's going to be anything that is, land, building, things that are fixed, immovable. If you close down the business, these are the things you're not going to be taking with you to a new location, versus the personal property, which is going to be typically movable assets. So those are going to be, your computers, your desks, your racks, things like that. So making sure that you know the difference between what you're putting on a tax return and not putting things you don't need to on it, and then making sure that you're aware of bills coming in and not paying those bills on time can be just as costly as an expired license, missing license, things like that, if you miss that window. So the property tax compliance cycle, kind of similar to licensing, where you're filing for, a license or a permit, and then at some point, typically they're renewable, and you get a notice that you have to renew it, and then you have to do all of the different tasks to actually get that renewal in. The property tax compliance cycle is very similar. The return information, you're going to be providing typically at the beginning of the year, but there's 4 different assessment dates. There's going to be bills that kind of are flying in from previous year returns and current year returns. So the tax year is important. The notices, making sure that you're okay with the value that you're being taxed on. Sometimes your opinion of the value of your property, the assessor's opinion of the value of the property is very different. And so you may have to file an appeal or, address that. And so the cycle is just basically a continual action that you're doing all of the administrative work of, filing, getting notices, tracking appeals, making sure you're paying on time, but also at a different level, planning and strategizing and accruing and deciding, if we're going to open a new location, how is that going to affect our tax bottom line? What's taxable in a new jurisdiction or in a new state? And then, making sure that you're understanding, what kind of resources you have for appraising the property or supportive valuation. If you're saying, well, I don't think that my property is worth that much, where are you getting that from? So having those resources to be able to check that easily and quickly, and then be able to work with partners that you trust to, help you out with those different steps. And so with Avalara, the property tax challenges, are something that we're very familiar with. So with personal property tax, you often, as Andrea mentioned, some of the jurisdictions are still very back in the 80s, print and mail. You're still mailing tons of paper, dealing with tons of paper. And so for the returns, they're having different deadlines. If you don't file on time, you can get assessed interest or penalty. If you don't file at all, then they're going to value your property based on whatever they think, not what you think your window has closed to appeal that value. So putting all of the different assets, depreciating them correctly, doing all of those things by hand, finding all the forms, knowing which assessors they go to, it's the difference between automating that and, having to do it kind of in a much more cumbersome way. Property tax assessments, you want to be able to compare that pretty easily. So if you get a notice of value that's wildly different from your property from the prior year, and nothing's really changed at that location, why is the valuation so different? It should be in line. So being able to easily do those kinds of analyses and compare, that to prior year value, market values of other properties that you have in the same jurisdictions. Those are things that, you're probably doing or your tax team is probably doing, and making it easier for them is always a good thing. Bills, the biggest issue with bills is that if you don't get the bill, you're still expected to pay it. And now with, mail being so much slower than it used to be, because typically they do mail those bills, and, you might not have anybody in the office anymore. You might not have an office anymore. So where are those bills going? Who's receiving them? How are they being processed? And how do you know if you're missing one? Because if you're missing a bill, I've worked with companies who missed one bill. They just didn't get it. They didn't have it. They didn't know to go look because they just were not on top of their data. And it was for, I want to say like $970,000. That 10% penalty was quite a big chunk of change that they had to pay, that they were not prepared to pay, almost $100,000 extra, which then triggered them, looking for help in software. But that's one of the biggest things, is being able to track when those bills are due, and did you get all the ones you were expecting to get? Did you pay all the ones you were expecting to get on time? And can you, prove that? Because if a collector sends you a late notice, you want to be able to show that you've actually done that work. And because all of this stuff is paper-based, documents and a document management system and an automation of being able to extract data from documents can be very helpful in this process as well. Because some of you guys are dealing not only with, property tax documents, licensing documents, all kinds of documents. They're coming in, fast, heavy, and you have hundreds or thousands of them, and it's a lot to deal with. So all of those components make up that challenging cycle.
All right, it's time for our first CPE poll question. So that should be popping up on your screen right now. It should be kind of towards the center with a countdown. So the first CPE question is, if your business licenses are current, you don't need to worry about property tax compliance. So true or false, make your choice and hit submit. I will note, even if you get this wrong, you will still get the point for the CPE credit poll question requirement. And then just a reminder, we do need to answer 3 of the 4 poll questions and attend at least 50 minutes to earn a CPE credit for this. So I'll give you just a few more seconds and then we'll see how you did. Okay, so here are the results. Melissa or Andrea, I'll let you take it back.
Well, the good news is that a lot of the people got the right answer. The right answer is false. In fact, there's a lot, some of the licenses we encounter actually have a requirement that you have to have paid your property tax and your property tax account is up to date. So they are definitely 2 different experiences, 2 different things to maintain. And you will not get a pass on either in terms of how the other one may or may not relate. So yes, you need your business license to be current, and yes, you need your property taxes, property tax accounts to be current. And in some, in some states like Maryland, for example, one is dependent on the other. So you can't even get a license if your property tax account is out of compliance. And some other accounts, some other tax types as well work like that with licenses. So just be aware that you need to have your eyes on all the balls at the same time, and they all need to be kept up, concurrently. Okay, so we're not going to talk a little bit about tax compliance and business compliance. And I think Melissa, you can take this one.
Yeah, so when we're talking about how sales tax is different than property tax, sales tax, there's the direct versus indirect tax, right? And so with sales tax, it's very different because while you do have to file, your sales tax returns or provide your sales tax returns and pay your sales tax, that's happening much more regularly. It's happening on a monthly basis. There's a very straightforward rate in each one of the municipalities. And so it's not easy to calculate all of that without, again, software or something like that, but it is a very straightforward calculation of your sales, the rate, how much is sales tax, and then, processing those returns, paying those sales tax bills. With property tax, as we've mentioned, that's not how it works at all. It's a very loosey-goosey opinion of value depending on depreciation that's applied. In many cases on the asset. So there are some states that are very straightforward. Michigan is a good example. The assessor publishes a table. It's right there on the return form. This is how much we're calculating that if your cost was this amount times this depreciation rate, this is going to be what we value you at. But a lot of them are not nearly as straightforward. And then you may feel that, certain property falls into a different bucket than they do. Maybe your machinery and equipment is on a 7-year life because you get new stuff a lot faster than some other companies. And, an assessor wants it to be on a 10-year life or an even longer depreciation schedule because frankly, then the value is higher and they get more tax money out of it, obviously. So it's not nearly as straightforward as sales tax, and it doesn't happen on that monthly cadence. There's different returns due in each month. There are different assessment dates and certainly different bill due dates all over the calendar. With property tax, again, there's an annual payment versus that monthly when goods are sold. The tax is collected right then. It's very straightforward. That's not how property tax works at all. The valuation versus legislated value, that straightforward published sales tax rate, not at all the same as, again, an opinion of what is the fair market value of a piece of property. And then with property tax, you have the option to appeal. You won't always win the appeal. You won't always have time to appeal, or the cost of the appeal might be more than it is worth to, if you're going to get a $10 savings of tax, but it costs you, $1,000 to file the appeal and, the resource cost, then you may not want to bother. But you do have the option to appeal the value and try to get a lower value so you're paying less tax. With sales tax, that's obviously not going to be an option for anybody.
Okay, sales tax versus business licenses. So similar to the property tax side of things, sales tax has its own unique quirks, and business licenses have their own unique quirks. In general, sales tax, with the exception of for home rule states, sales tax is at the state level, and we do have those home rule states so that have some sales tax at the city or county level. But as I mentioned at the top of the meeting, we've got thousands and thousands and tens of thousands of different jurisdictions issuing licenses and having authority to kind of administer the right to do business and how you do business across states, counties, local, and special districts. So you're going to have that many more pieces of paper or e-paper to deal with based on the entire gamut of jurisdictions that are imposing. Sales tax is triggered by Nexus. Nexus has fairly defined rules. Even those rules are evolving, but they kind of evolve in a big way. Business licenses are going to be much more varied. There's something called an authorizing statute, and depending on the language in the authorizing statute is going to be how to determine whether a license applies to your business. And those authorizing statutes have changed and morphed over time. And so you're going to have a lot of variability on how the licenses are imposed. Excuse me. And then with sales tax, the volume of transactions is highly relevant. On the business license side, it's a lot more about the number of locations or service areas that are highly relevant. So you're going to have differences in terms of what is the variable that you're looking at. On the sales tax side, there's really little distinction between regulated and non-regulated activities. If you have a sale and that good or service is subject to sales tax, it's going to be caught in your calculation. On the flip side, there is a very, very large difference in how a regulated activity and a non-regulated activity is going to be treated by the authorizing authority. So just to give a little more definition on that, a regulated activity is something that has oversight, has some life or safety, health or safety component to it, or some kind of legal protection, consumer protection component to it, versus a non-regulated license where it's just going to be permission, kind of just an acknowledgement or a notification to a jurisdiction that you're doing a fairly generic business. So for example, retail would be a non-regulated business. There isn't a lot of concern around how the business is conducted. They just have to register for the privilege of doing business in a jurisdiction. Whereas a food business, for example, you want to make sure that it's clean. They're complying with different regulations in terms of safety, employee safety, food prep, cleanliness, hygiene, things like that. So that's the kind of nuance between regulated, non-regulated, and the paperwork, I can tell you, is very, very weighty on the regulated side, not so much on the non-regulated side. Sales tax registrations typically never expire. There are 13 states that you do have to do periodic renewals. On the licensing side, you have to note that some of these licenses are really a revenue driver for the cities, and they are constantly, similar to taxes, are constantly being paid over and over again. So they're kind of recurring in that regard. So you have to get the license initially, and then you have to keep it in place by filing whatever the renewal period is and paying an additional fee. So it's a little bit different than sales tax registrations. Sales tax compliance is the responsibility of tax departments. Business licenses, for better or for worse, as a hot potato as far as who's responsible for them. They bounce around from tax to legal to operations to compliance, real estate, depending on what kind of business you have. Different parties within the business will have responsibilities. Some parties have responsibility to get the new license, but not the renewal. Nobody really loves it, so it kind of is a little bit orphaned in an organization. And because there's so much variability around licensing, different types of licenses may belong to different departments. But the idea is that in order to be efficient and in order to be compliant, you really want to get your arms around it and centralize it. Okay, business licenses. How many locations do you operate in? So this is going to be kind of two locations around what are the critical considerations. How many locations do you operate in? It's not the same thing as Nexus, but it is going to be physical locations, service areas. It can be a brick and mortar location. It may not need a brick and mortar. You may not have to have brick and mortar, entity there. You could just have some kind of mobile service. You can have, you know, technicians going in, salespeople going in. Salespeople are, you may be familiar with that from Sales Tax Nexus, but operating in multiple ways can create nexus or create the requirement to have a license in location. Alabama is notorious for, if you deliver or if you have a truck rolling through, you might kind of attract nexus. So you want to be careful. It's not, there isn't a lot of similarity between Sales Tax Nexus, but the word nexus does apply as well in the business licensing arena. So how many locations do you operate in? That can be physical locations, it can be service areas, it can be mobile units that, for example, companies that come to your driveway to replace your windshield, that becomes a location. So you have to really be aware of, for your business, what is a service area, what is a location. And then the second one is, are you in a regulated, non-regulated industry? That's kind of what I touched on earlier. Food, liquor, heavy machinery, things like even architects, accountants, all those kind of businesses, engineers, contractors, anybody that has some kind of responsibility to deliver something that is, has to stay standing. You want your buildings to stay standing. So you want to make sure that your architect, your engineer, and your contractors are licensed, because if something happens, you want to make sure that somebody is the responsible party. Same thing with food, liquor, tobacco, those types of products. You want to have a responsible party making sure that liquor is only sold and tobacco are only sold to people of appropriate age. The food is safe. Your servers are properly trained, things like that. So you really have to know what kind of industry you're in and then make the assessment of what kind of licenses you need. And you have to really understand how to maintain those licenses. The more regulated the license, the more likely there's going to be multiple components to obtaining the license and maintaining the license. So you may have criminal background checks, you may have fingerprint requirements, you may have to put up a bond. So again, as I mentioned earlier, the non-regulated license is usually a couple pages worth of declarations that you have to make to the authority that you're trying to get the license from, whereas the regulated side, you're going to have a multi-step process. And you will have, ultimately, most of these need a named person, an individual. And that gets complicated for large companies. Who is the individual? Do we want to put the CEO on the license? What are our options? So you have to really understand that what part of this is trying to find a responsible party and really figure out who is that responsible party and how do we maintain that license in the face of, employee changes, officer changes, things like that. So all those kind of business events that happen could impact your licenses as well. Moving forward, we get to poll question number 2.
So you should be seeing that CPE poll question number 2 on your screen. It should be a pop-up towards the center. And the question is, how can businesses benefit from automating property tax and business license compliance? And we have several options. So by replacing their sales tax compliance burden, by minimizing risk of penalties, by reducing HR costs, all of the above or none of the above. So take a moment to make your selection and hit submit. And I'll give you just a couple more seconds to do that, and then we'll look at the responses. Okay, so here are the responses. So I'll hand it back to Andrea or Melissa.
So I think that, this one, there's not really going to be any change per se to reduce your sales tax compliance burden, but dramatically minimizing risk of penalties is going to be, really the focus there, because both on the property tax and business licensing side, making sure that you know when things are coming due and doing them on time is really the key factor here of avoiding penalties and avoiding risk, really, which is a big deal, I think. So I know some of you said all of the above. And I think when we see HR costs, we really think about resource costs, right? And resource costs definitely do typically get reduced when you're, using tools and automation and things like that. It's also, helpful for those folks, especially if there's turnover, like Andrea mentioned, that you have somebody that can just kind of step into a tool instead of, that they take that whole brain trust with them. So jumping into trigger events, because I think that's where a lot of the licensing and property tax rubber sort of hits the road. There are things that we would call, trigger events that are going to make a difference in terms of what is now going to happen with your compliance merging, as far as, the examples of mergers, partnerships, businesses coming into agreement with somebody else that may then all of the burden may fall on one tax or licensing team or the other to make sure everything under that umbrella is current. Acquisition, certainly, if there's legal entity changes, geographic expansion, you're going into a new location, a new jurisdiction, all of those things on the property tax and the licensing side are what we would consider triggers, because then both sides have to make sure, do we have the licenses we need in place to go into this jurisdiction? Do we need to refile licenses, or do we need to update signatories for property tax returns if there's been a merger or a partnership or an acquisition? And that doesn't always get thought of or talked about when those partnerships or those mergers are happening, and then the teams kind of are scrambling on the ground to make sure that everything's done in time, because not being able to open because the licenses aren't in place is definitely going to be an issue, or getting hit with a giant new bill, or there's appeals, in court in a jurisdiction for the company you're acquiring for property tax that nobody told anybody about before those people left. So you guys have probably all been through that kind of a situation. And that, at the upper levels, they're not always thinking about those things, but it affects everybody who has that hands-on responsibility for those kinds of things. And Andrea, certainly, if there's anything else on trigger events that you want to touch on.
Yeah, I think the key is really awareness. So things that you might not be focused in on if you're doing a merger or you're doing an acquisition, it's often, fairly obscure that you might have a licensing impact. So it's really important when you have some kind of business situation, a transition, an owner leaving, an officer leaving, that might have some downstream licensing impact. Because, like I said earlier, maybe the license is tied to that individual. This happens a lot. So any kind of business event, mergers are big. The right planning around a merger can really minimize some of the licensing impact. What you don't want to do is get caught with a situation where, perhaps one of the entities is winking out of existence after the merger, and all the licenses are tied to the disappearing entity. And so therefore you now have no real entity holding the licenses. So getting ahead of a merger conversation, licensing as part of due diligence, similar with acquisition, similar with even just selling a new product, not just geographic expansion, but offering a new service, selling a new product. You might have been in business for many years, have all your licenses up and running, and then you decide to put some candy at the cash register, and all of a sudden you're stuck without a food license, or something along those lines. So really, any business decision, any operational change, any kind of organizational change, those are things that might have some kind of licensing impact, and you want to have awareness. So that's really a word of the day. Let's talk a little bit about, we talked a little bit about M&A, but let's talk a little bit more. So, on the licensing side, when you're dealing with the M&A, concept, you're talking about two companies joining, entities, the corporate organization or the entities may or may not last past the transaction date. So really getting your arms around what entity holds which licenses is going to be critical on the licensing side to make sure that nothing gets lost. There's no business interruption. I've had a situation where a company wanted to go through a merger and they postponed it because they were afraid that they wouldn't have licenses in place during the Christmas season. So they didn't want to have any kind of business interruption. So really timing, really getting a ground level understanding of where the licenses are, who holds the licenses. If in a merger, some employees may no longer survive when there's an acquisition or a merger. So if there are licenses, for example, in the contracting space tied to particular qualifiers, that has to have coverage. Any type of planning or due diligence discussions should have licensing in at the top of the list, and there are checklists for this. We can help with that, but the idea is really to understand that there's a lot of glamour around an M&A, but all the grunt work is really what keeps the business going. And you know, Melissa can talk about how the impact is on the property tax side.
Absolutely. I mean, one of the things that I've seen happen a lot is when there's a merger, they don't always need two tax teams, but one of them is the only people that know anything about either the acquired business or the parent business. And so, making sure that existing exemptions or abatements of tax are kept intact. If, the new team doesn't know that there are those things in place, they don't always, refile for them or make sure that they're still getting them. Similarly, if you're acquiring something that maybe has now abatement opportunities, maybe it's manufacturing business or there's environmental equipment that you get, potentially an abatement or an exemption for, then taking advantage of that, knowing what's happening in those jurisdictions that business was operating in. Also, one thing we see a lot of is people not using the same software systems, right? So if you have, an ERP system that's holding all the assets, and then the new company, maybe was doing it in spreadsheets, but nobody bothered to get the spreadsheets from those people, you're missing a lot of asset records. And so comparing those things, making sure all of that is, combined into a new system so that you can appropriately generate returns, close out old accounts if needed, things like that. Also, sometimes one company has, thresholds of, what is capitalized, what isn't, what's expensed assets. And those things can also, indicate what is going to be reported or how it's going to be reported on a return. And so if you're dealing with two different thresholds with parent companies and acquired companies, making a decision about what's going to be the best thing going forward, and then maybe reassessing, all of those prior assets or how those are going to be reporting. And then both for licensing and property tax, mailing address changes is big because, as I mentioned before with mail, a lot of this stuff is paper. And I've seen, there was one company that they just changed addresses. They didn't even acquire anything or do anything. And 3 years later, their bills were still going to the same old address, even though they had reported for 3 years, this is an address change, this is our new address. So they still had to go back and try to collect those old bills going to the old address. And they were responsible for them, even though the collector kept sending them to the wrong place. So, as Andrea mentioned, awareness of all these things, it will help avoid any problems or surprise costs.
I think this one is yours as well, Melissa.
Yeah. Relocating business assets, again, similarly with license as well. If you close one location and move it to another location, sometimes you will have to typically refile for licenses or move licenses to that new location if it's in a different jurisdiction. Those kinds of things can make a difference. But also with property tax, that when you move assets, it may be that you're in a different tax rate or there's different valuation methods which can affect your tax bills. But also you often have to file a zero return for the old location and then file the new additional assets that have moved into the new jurisdictions as additions to indicate to the assessor, these weren't on our form last year, but now they're here, so you should be assessing them. And then, just making sure that there's when we talk about relocating business assets for companies that lease property or lease machinery, things like that, those physical addresses could be a customer location, a personal address, anything like that. And those things, you really do have to keep track of because you could have a lot of liability in one jurisdiction one year, and then all the equipment gets leased somewhere else the next year, and then you don't have any liability in the old jurisdiction. You do want to close out that account and let them know, oh, all of our property has moved out. Do not tax us. There's nothing here anymore. And then just touching more on that, business personal property is generally taxable. There's some specialized equipment that may be exempt. So there's a lot more states that are, giving environmental exemptions for, solar, renewable energies, things like that. So staying on top of knowing what those new laws are. And if you don't have people to do that, using a partner firm or something like that is often worth the money to, just have somebody kind of do a check and let you know what's going on with your property if there's any changes to the laws that affect your taxability of that. And then Andrea mentioned, timing on licensing. It's also important on property tax because the timing of the purchase, depending on the assessment date of a particular state, as I mentioned, there's 4 different assessment dates across the year for property tax. If I buy something or if I move it, depending on, when I do it, if I do it after the assessment date this year, I don't have to worry about it till next year on my tax return. But if I buy it before the assessment date in that particular state, I might have to report it in 2 different states across the year if it moves, and I'm basically getting double taxed on that same asset. So, lots of different considerations.
I just want to make one more comment on the idea of placing equipment somewhere. One of the areas of licensing is kind of relatively newer, past 20 years compared to the first 50 or 60 years of licensing, is the concept of gross receipts. So you can have a piece of equipment in a location that's generating revenue for you, and all of a sudden, if that location happens to be in a gross receipts imposing jurisdiction, you can have a fairly significant licensing liability in addition to the property tax liability. So just be aware that part of that nexus idea I didn't cover was also actually having equipment placed. We talked about service areas, we talked about mobile units, but actually just having a piece of equipment and leasing it and having it sit in a hospital or sit somewhere, could be any kind of equipment, could create some kind of licensing nexus as well. Yeah, so divestiture is one of those areas that is also quite rife with pitfalls on the licensing side. So one thing I can tell you is that it's very critical to maintain licenses in compliance, but you also don't want to kind of, if you withdraw from a jurisdiction or you divest or you sell assets, you don't want to leave your business licenses open as if, we're just, we're not doing business anymore, but, we're just going to kind of let it ride. That is not advised as far as the authority is concerned. Even if you have $0 of revenue coming in on different types of licenses, just the fact of having the business license and not taking the proactive step of canceling the license could create an ongoing liability for you. And penalties and interest can accrue. A lot of the penalties and interest are mandated, so you can't negotiate your way out of them. So when you are moving away, divesting, you have to have awareness of, closing the business licenses. We have companies that have gone into bankruptcy, ceased operations, fired all their people, including their licensing lady, and yet are, still stuck years past the going out of business sale with bills from the authorities. And they kind of, it's just a headache. It's just, something you want to, again, have your eyes on. If something happens that your business is contracting or just moving for good reasons, really keeping an eye on closing business licenses is equally as important as opening the licenses. But, moving is also a thing. You have to close one and open another. So it's like kind of a two-sided coin.
And then I think just touching, on, because I know we're tight on time, company reorganization on, certainly both sides. Often the signers are going to be potentially different if there's different people going into different positions. That can affect property tax, and it can also affect, who's managing appeals or doing things like that. So those are some of the things. It's much more affected on the licensing side, depending on the officer structure, as Andrea mentioned. So she can touch on that, and then we'll jump to the next poll question.
Yeah, you just have to be aware what entities holding the licenses. Are there any individuals associated with the licenses? And if so, what's the game plan? So, company reorgs are going to be one of those areas where you want to have some due diligence as well.
All right, time for our third poll question. That should be on your screen right now. The question is, which of the following is a good example of a business event that is likely to impact property tax and business license compliance? And the options are new hire in sales department, merger or acquisition, attending a tax, accounting, or finance conference, or decreasing the operations budget mid-year. So take a chance to answer that. As a reminder, you need to answer 3 of the 4 poll questions, and this is the third poll question. So I'll give you a moment to get your selection in. Make sure you hit submit. Okay, and then here are the results. Okay, I'll pass it back over.
Yep.
It looks
That
like
looks
everyone
great.
got the key.
Yeah.
M&A is the key. That's great.
All right, simplified data and processing. So when we're talking about technology on the sides of property tax and licensing, using technology to do that, obviously whether you're working in spreadsheets or you have some sort of tool, the biggest benefit is using it to automate the data entry, not having to, just data enter everything, minimize it, decrease errors, make sure that there's accuracy, using APIs or integrations to automatically transfer information to perhaps other systems like your AP system. So reporting, it becomes much easier. Everything becomes much easier when you're using technology. And then
Due
I
date
think in
tracking
both,
is,
yeah,
yeah,
go ahead,
go ahead. I was
Andrea.
going to say due date tracking is another area where you can use technology, calendaring, and then you can always have a good visibility if you have everything tracked of when you're going to need cash. So you can plan your cash requirements, and also, kind of alert yourselves to upcoming deadlines. So again, using technology, this is one of the areas where technology is really strong. You kind of set it and forget it up until the time you need it, but it's very, very highly recommended.
Yeah, we're very used to using tools that really put that calendaring right up front for you because you all have so much to do. You're all so busy that it's, overwhelming at different times of the year when things are coming in. And so having, just something that shows you this is everything you have to work on. These are your priorities really can make, managing the work and the resources and the workflow a lot easier.
Yeah, here's the other, kind of another aspect of this is how to manage the liabilities, really keeping an eye out for cash flow, keeping an eye out for making sure you have the resources available to do what needs to be done at the right time. So, in the licensing world, I think Melissa said, in the property tax world, these bills come at any time. It can come on any day, depending on when the date of the equipment or property went into service. Licensing is typically more set. Most of the licenses are due in the December, January, February timeframe. But then again, because there's so many issuing authorities, you're going to have licenses due quarterly, licenses due at the date that you went, that you obtained the license. So there's really going to be issues all year round. There's data validation. You can use systems to say, hey, we paid this much last year. Our bills, it looks like it's going to be this much this year. Does that make sense? My square footage was X, should be the same. My gross receipts were Y, that shouldn't be the same. So you can have a lot of data validation built in. And it gives you an audit trail. So you want to make sure who did what when. System, if you have a good, robust system, you'll be able to see who was taking the action at that given time.
Absolutely. So as we talked about, technology, we use Avalara Property Tax here at Avalara, and it's a product that allows you to automate property tax bill due dates, bill entry with extractions from your bill documents, your notices. They can extract everything just from running the documents through it, which obviously minimizes human error, minimizes data entry, and makes sure that you have everything kind of just right at your fingertips to pay those bills and compare those different values. And then having all the return preparation stuff, all the depreciation tables, all the return forms. Once you bring your assets in, you can literally hit 3 buttons and get your returns done versus, having to go kind of one by one and do all the calculations yourself.
And Avalara license management is a similar story. You can centralize, talked about centralizing before, you can centralize all your licensing elements on one secure platform. You can have collaboration, there's good tools in terms of different areas where you can leverage the strength of the system to help all your teams collaborate on licensing, multiple views, multiple viewers, customized reports, things like that. And then actually our Avalara license management tool has a research library where you can look at what forms, what licenses might be required for a given business activity in a given business jurisdiction, and that calendaring again that we talked about before. So you'll have everything planned and available for you with alerts, with projections when you're going to need, more resources to work on licensing, when you might need more money to pay those licenses. So all those are built into the system. And this is just a quick slide about the licensing lifecycle. This is a, repetitive task. You have to get renewal data. You have to get the forms from the authority. Sometimes they mail it. Sometimes you have to request it. Sometimes you have to go online, prepare the forms, calculate the fees, et cetera, et cetera. So these things are repetitive, and having a tool that can help you calendar them and give you insight into what you did last year, what you have to do, what are the steps. This one needs fingerprints. This one needs a background check. This one needs gross receipts. This one needs inventory values. Having all of that listed out for you makes your job a lot.
Okay, it's time for our fourth and final poll question. So that should be on your screen. If you're interested in learning more about what we just reviewed with the property tax and license management, you can select yes to this question and hit submit. So we have about 5 minutes left, so we have a little time for Q&A. So for the first question, someone asked, is there an additional fee to register new locations? What about Colorado, for example, which has a lot of municipalities? Any thoughts on that one?
So I think if you're talking about tax rate, I assume you're talking about a home rule. So yes, some of the states will have fees when you have to file for a new home rule city. Some states will have fees, some won't. It's going to depend. And then, as far as if you were doing it with a service company, there would be obviously service fees involved with that. But it's going to really vary. You can sometimes, for a sales tax account, you can just add a new location onto the master account. And with the home rule cities, usually there is going to be a processing fee associated with registration, but not everywhere. Some places have no fee at all. So it's really going to be dependent on either the state or the municipality.
Okay. And then we had another question on how licensing is impacted by a corporate restructure. And I know
Yes, I think we touched on it a little bit.
Yeah.
I think we touched on it a little bit, but it depends on what the restructure is. Are we talking about going from an Inc. to an LLC? Are we talking about officer changes? Are we talking about flattening an organization that had multiple entities into fewer entities? It's all going to depend. What entity holds the license? What entity is intended to hold the license in a restructure? If you're going from an Inc. to LLC, is the EIN persisting or is it going away? If there's a change in EIN, most likely all your licenses with that EIN are going to have to be redone. If an officer is leaving, that could be, an impact. If the employees are changing or leaving the entities, that's going to have some impact. So yeah, there's all kinds of potential impacts in terms of licensing on a reorg, on a restructure.
Another question was, does your Avalara system help me figure out which licenses or property tax forms I need?
Yeah, I think
So
that the Avalara.
Oh, go ahead.
Sorry.
Go ahead, Melissa.
I was just going to say on the property tax side, yes, because when you bring in your location data, so let's say that you have properties in, 10 states, you're going to be able to see which states, do you need to be filing property tax returns in? And then also what forms are going to be required for that. We provide all of the forms in the system, so you'll be able to see that easily.
And on the licensing side, our Avalara license management software does have a library. And so you can, by address, because again, everything is down to the jurisdiction, take your address, we'll geocode it, we'll tell you which is the proper state, county, city that is, covers that particular piece of geography. And it will show up based on the selection that you make for your business activity. The system will suggest what forms might apply. Again, you may have to make a business determination. For example, it may throw up a payroll form or an employee-related form, and if you don't have employees, obviously that's not going to apply. But it does aggregate a lot of forms that you might have to go out and search for independently. So this is a great tool that kind of serves you up potential forms that you might need. and you have to make some, business decisions based on your specific facts and circumstances, but it really takes a huge chunk of time to aggregate all that stuff. So this kind of serves it to you in one query.
Great. Thank you so much. We are at the top of the hour, so I will close us out. Thank you, Melissa and Andrea, for presenting today, and attendees, thanks for your questions and for joining us. So to wrap up, if you qualified for CPE credit, you can download your certificate now in the CPE Certificate Engagement tool. Your certificate will also be available in a post-event email that you'll receive later today if you don't have the time to download it now. In that post-event email, you'll get a link back to this console so you can get the on-demand recording, the slide deck, the additional resources, and that CPE certificate. So thank you all so much for joining us today, and that concludes our webinar.